Good day, everyone. I'm Jean-Paul Tsotsos, Interim Chief Executive Officer of Chesapeake Gold. As a reminder, Chesapeake is an explorer, developer, and a technology company, and I'm here to talk more about the technology. And I have our new Chief Metallurgical Officer, Justin Black, here to join me to discuss his experiences with the technology, as well as where we're going with the technology within Chesapeake, which is a new frontier for the company and a very exciting opportunity for our investors.
Thanks, Chief.
So just a couple of cautionary notes. I'll let you go through those on your own time. Just to provide just a high-level summary, obviously Chesapeake owns the Metates deposit. That's 17 million ounces of gold with another 423 million ounces of silver and M&I, and then another 2 million ounces of gold and inferred, and about 60 million ounces of silver as well and inferred. This deposit's been around for a generation. One of the biggest challenges is the gold and silver is trapped in pyrite crystals. That's the impetus of our technology and how our technology plays an important part in Metates, but also looking at other deposits that have a similar challenge that Metates had to unlock those as well. There's a little bit more details. We also have an exploration project called Lucy in Sinaloa. Very exciting project that we're continuing to advance in the background. We're in Mexico. We have strong community relations. We have a lot of cash in the bank to continue to move forward with our initiatives when it comes to technology, Metates, and Lucy. And finally, we have strong shareholders, both with Eric Sprott and Sun Valley, as well as our management directors hold a significant position. So to dive right into the technology, globally, there are many deposits out there that have precious metals. A lot of them start off as these sulfide deposits. And what happens over 100 million years is nature gets in with its chemistry and it naturally sequesters and takes away the sulfur. And through time, oxygen is replaced. And so that normally the top parts of deposits over time become oxide deposits. And then if you go deep enough, they remain to be sulfide deposits deeper into the deposit. The big challenge here is oxide deposits. Obviously, those are amenable to heap leaching. And there's many examples globally where heap leaching is done. But the minute we get into a sulfide deposit or a deposit has not been oxidized and it's fully sulfide, you have to go to more challenging methods to extract the precious metals. Chesapeake went down that route. We'll go through that a little bit. But with the addition of the technology, we have a different alternative pathway that is economically friendly, financeable, and executable. And just to put it into perspective, our technology basically takes that 100 million years that nature changes a sulfide deposit into oxide ore. And we're doing that at the lab, and we've done that at scale 2, which Justin will talk about in his previous experience. There was a report out by McKinsey & Company that looked at all the ounces globally. There's 2.6 billion ounces. About 1 in 4 of those ounces is considered refractory. That means 580 million ounces globally are locked and inaccessible. And so that's about a $1.5 trillion market using $2,500 gold. We believe that our technology will address that need in the industry. Instead of looking for more challenging deposits through exploration, these deposits are already well known. A lot of them are at surface, easily exploitable. The only challenge has been the metallurgy. The other exciting part about refractory deposits is they typically are higher grade because they've been left behind. All the non-refractory have basically been mined or in the process of being mined. And so the average grade of a refractory deposit is about 2.25, which is almost 100% higher than the non-refractory type, which is about 1.21 grams. So what Chesapeake has been doing over the last year, we went to the predecessor, Highcroft. We acquired our underlying license for the technology. We acquired a portfolio of patents. We brought that all in-house. That means all of the IP and everything is now within Chesapeake's domain. There is no relationship remaining with the predecessor, and everything is now in a entity that has the authority of the technology and the in-house expertise. We have Randy Buffington, who was the CEO of Highcroft when the technology was being developed. We have Alan Pangborn, as all of our viewers know. He was another founding father of the technology and advanced it through Chesapeake for the last almost 4 years. We have Art Lobrato, our QP. He was the head of M3 Engineering when they were developing the technology at Highcroft. And now recently we've added on Justin Black, who also worked at M3 advancing the technology and later joined Highcroft to further advance the technology all the way up to a commercial scale. And so I'll let Justin talk a little bit about that and his background.
Sure. Yeah, I spent a lot of years consulting. Highcroft was an opportunity for me to get into new technology in mining, which is rare enough. So about 8 years ago, I spent time in the lab at Highcroft's facility trying to figure out a way to make all the oxidation processes that JP mentioned come true and be realized on a heap environment. So from small bottle rolls to column tests to increasingly large columns, we continue to find success and refine a process that we're really calling a heap oxidation until we got it to a commercial scale 150,000 ton test pad. And we had really great success on the test pad material that was 20% recoverable gold at the start, made it into the 80% and even 90% for one of the domains. And so from there, we continued into production through the crusher, filling out all the available leach pad space, some oxide, some sulfide, but I think it was about 900,000 tons of sulfide ore was processed this way using a small kind of homemade reagent island just from resources within Winnemucca. So it was something that we were able to prove out at a large scale right up until COVID kind of swept through the area and shut down a lot of mines, put wrenches in a lot of spokes in operations out there. And at the time, that had been my last involvement with the technology. It was a disappointing end to it for me, but I'd seen it be successful. I knew that it would resurface in the industry. And then JP and Randy and the team at Chesapeake came calling not long ago, told me that they'd acquired the technology and that there was an opportunity to kind of continue fulfilling the vision we had for it originally at Highcroft. And Chesapeake and Metates and some of the people we're looking to partner with are starting to see that vision, and I really think it's going to be something that makes a big impact on the industry.
So to give you guys an understanding of what, this really does change the industry. So just looking at Metates as a case study, Metates over a long period of time, since the 1980s, it's gone through several hands, even large companies' hands, through the period of almost 45 years. And always the challenge was the refractory nature of the deposit. Chesapeake took it over back in around 2008. They advanced it to about 2016, where they put out a PFS looking at a POX autoclave. Again, this is mining 100% of the resources that are labeled at the top there. But when you have a big deposit and you need a technology like POX autoclave, you slowly start, growing the scale of the project. And so it got up to about 90,000 ton per day operation in order to get to the economics that they thought would be exciting. And that ended up being about a $3.5 billion capex. And as you know, in a small company, that's very challenging. Obviously, for a larger company, it's plausible that could be done. But this is a huge project. They were looking at about 560,000 ounces of gold produced every year. And the pre-tax NPV for that was about 1.8 billion, which sounds exciting. But the IRR, or the return on investment at the time, was sub 10%. So it was very challenging. And with a capex of 3.5 billion, the reason why it's so large is because we needed to have a desalination plant to bring water to site. We had a power plant on the grounds. We had an oxygen plant. We had flotation cells, a tailing facility, and all of those things just add up very quickly to a big project. And what the technology has really done is it's removed all of those pieces as well as it's allowed us to start off at a much smaller starter project, around 15,000 tons per day. We're looking at about a quarter of the deposit in the first 30 years. And that is also expandable. So we could move from 15,000 tons per day to 30,000 tons per day to bring more cash flow forward, and at the consequence of losing a bit of mine life. But to start it off, 360 million is actually financeable, executable, and buildable. And if, when you look at things that are in the billions of dollars, even the large companies, if they were to buy it, other opportunities that have a lower capex or an easier metallurgy would likely get put ahead of Metates. And so by having the technology within Chesapeake, it really has given it an alternative pathway forward. And it's going to produce a meaningful 147,000 ounces gold equivalent. You can see that the NPV there is a 1.4 billion pre-tax, NPV at 5% discount, Canadian dollars. And then to just follow up, that's running at all-in sustaining costs, life of mine, about 750. So that's first quartile. And all of the economics are based on $1,600 gold and $22 silver. So the IRR is 35%. There's a lot of upside on the commodity side. Also, we had, when it comes to our assumptions with regards to recovery, we were very conservative when we did that. And we've shown in the lab that we can even get higher recoveries with the new technology. But it actually, the most important thing was now there's a pathway forward for Metates, and that's solely because of the technology. So one of the things that we were working on over the last few years is a key part of it is the oxidation. So the time in which the material that's mined with the sulfide oxidizes and forms oxide ore, basically. And the faster we can do that, it reduces the reagent costs, as well as it would reduce the working capital required before you get your first bar of gold. And so a lot of the work was changing single variables on a whole bunch of different aspects of the technology, whether that is changing the concentrations of the technology, changing the chemistry of the technology, looking at different on and off methods and various other different strategies that we used. And through that process, our best previous result was in the first 60 days, we could get about 10% oxidation. We found one result that got us up to 15%. And then we found a variety of ways not to do it. And the average of those is about the 5% there in blue. And the way we view it is the same way Thomas Edison viewed his light bulb, is once you get it right, you just ignore the 999 different ways that you failed, and you focus on the one way that works, which was the tungsten element. He took that, he patented it, he commercialized it, and we have light today. And so this green bar with the 15% was our light bulb. And we then took that, and over the last year, we basically placed a various set of columns. The first set of columns here does not use the technology. So it's 0 days of oxidation. And when you're looking at it, that's just cyanidation, and we could only achieve about 33% of the gold. And so this is why it's considered refractory at Metates and why there's been these challenges for almost a generation. We then had a series of columns. One went to 126 days of oxidation, and we achieved 50% gold recovery. The next one was 146 days of oxidation. We get about 60% recovery. And then 204 days of oxidation, which got us up to about nearly 75% gold recoveries. And Justin, do you have any kind of commentary on kind of what you saw previously and where you're working before on?
Yeah, I mean, this is a great result from Metates, and we've seen there are a few different ore bodies where we've tried this on, not all of them public. And what we've seen is that every deposit behaves a little bit differently, but if we have deportment of gold in pyrite in that sulfide, then it's going to work. It's just a matter of determining what the kinetics are. So Metates actually is one of the longer oxidation cycles, getting up to 204 days, but we've seen others where we've had a similar or even bigger jump in less days, maybe 120, 180 days at the max. So there's a nice difference, it depends on a few things in the ore. Some of it proprietary, but a lot of it is just the characteristics. Do you have a lot of sulfide or a little bit? Things like that.
Okay. Sorry, go ahead, just to jump in. Just trying to understand the chemical and physical parameters that limit the oxidization. You talk about some of the reagent efficacy, etc., oxygen diffusion, etc., so forth. But can you sort of talk through some of those factors?
Every different ore, what we're going to look at when we're developing a flow sheet for it, part of it will be, the crush size. Is this material that's going to be stable at a really fine 1/4 inch, or do we need to keep it 1/2 inch, a little bit coarser, to make sure that your slopes are stable and you can stack it up, and you'll still have porosity for solution to get through. And that void space also allows oxygen in, which recharges the solution as it's spent in the oxidation process. Some material, as you oxidize it, it all releases acid. If it has more sulfuric being generated because it has higher sulfide to begin with, then that'll kind of eat into your reagents more. And so it'll take longer to replenish those and repeat the cycle. For example, we've mentioned Hycroft and Metates. Hycroft averaged about 1.5% sulfide. Metates gets up to about 6% in a lot of the samples we've tested. So just by virtue of what's there to oxidize, it takes longer. And Hycroft, that lower percentage, is a little bit more amenable, it reacts more quickly and opens up access to the gold more quickly. But as we've seen with Metates, more sulfide doesn't necessarily mean you can't accomplish it. So,
what about other kind of sensitive factors like microbial factors, temperature sensitivities, permeability, etc.?
Now, permeability, we haven't run into anything that permeability has been an issue. Hycroft was actually pretty difficult from a permeability perspective, but it still worked out. Microbial, nothing like that plays a factor, but temperature, anywhere you go, just the cyanidation step on heap leach can be difficult if you've got a lot of freezing conditions. But for the actual oxidation, that's not an issue. If you can do cyanidation on the heap outdoors there, you're going to be able to do the oxidation, because even though you'll lose some solubility of any reagent in water, the one reagent that actually increases solubility as it gets colder is oxygen. Oxygen actually goes up in solubility as you get colder. And so that offsets some of the loss of solubility of our actively added reagent and keeps the oxidation process moving even when it's cold.
Right, and then so coming back to that kind of oxidation duration, you said it's sort of at 204 days that they sort of upper limits. I mean, is that sort of driven primarily by I think you've referred to chemical kinetics or diffusion limitations or reagent concentration stability? Can you sort of explain what they are for people?
Yeah, so the things that limit it, without getting into anything proprietary where JP is going to cut me off, you do have to get your solution through it to replenish it. We plan an agglomeration to get things started, but after that, you want to replenish your reagents, and you're limited to whatever heap leach is limited to. Your solution only comes down through the heap so fast, right? And then heaps really breathe. They're not a living thing, but they react a lot of the same way as pressure changes and temperature changes outside the heap through the day. It draws oxygen in, and that'll do most of the replenishing of your air. So between the changes in your weather patterns that are helping it breathe, the solution coming down, and then again the characteristics of the ore, that'll define your kinetics. Then, as with most things, there's an economic aspect to it where, we see this nice curve on the screen, and at somewhere on that curve is a point of diminishing return where we say, okay, we could keep oxidizing forever, but if we get 2% more gold out, forever hasn't paid us anything. So we're going to figure out a point, maybe it's 150 days for one ore body and 100 for another, where we cut it off because we've started taking longer to oxidize, less gold's coming out. Some factors are going to make that decision.
And this probably might get into an area where GP says no, which is just trying to understand things like, formation of sulfate or elemental sulfur layers on mineral surfaces. Yeah.
Right.
No, I'm
Sure.
just trying to think of
you're asking about like a passivation layer or something like that.
Passivation phenomenon, where you can moderate it with, again, reagents or whatever. I mean, because those are eking out this is kind of chemical engineering in a way.
That's my background.
Okay, well, there we go. So can you talk to that?
A little bit. We have not observed passivation phenomena that have affected gold recovery anywhere that I've seen thus far. We have had, so if you lose your grip on the oxidation process, mostly it's happened in the lab, experimenting, and your pH starts moving around a lot, you can form jarosites, which will affect your silver. That's pretty common, not just with an oxidation process. But this process actually has a benefit in that we're doing an on-off pad, and when we rehandle it and mix in lime for the normal cyanidation step, the agglomeration we're going to do there should actually help break up some of the jarosites. Just the agitation will open some of those surfaces that will have been sealed off on a normal heap.
Right. Okay. And obviously, there's a whole bunch of this which is proprietary. JP's paid a lot of money for it, no doubt. But can you sort of explain the sort of mechanisms by which the kind of the reagents sort of enhance that oxidization, in terms of oxidant efficacy, the catalytic function, etc.?
Yeah, so the next slide here is really looking at different sulfide forms. In the top two images, so the top right image it's called marcasite. You can see the chemical formula there. It's iron with two sulfurs. And actually, when you look in the image to the left of it, that's in black and white with the red dots, you can see a similar structure. So you can see that radial pattern, you can see that crustal form on the outside, and that sample on the left is actually from Metates, and it's been exposed to the oxidation process, and through that, every little red dot you see there at the end of the scanning electron microscope, there's actually an XRF gun that takes the chemistry, and every single point that has touched that what was a sulfide, now is coming back as 2 iron with 3 oxygen. So it's an oxide form. In geology, we call that hematite. What you would call it is rust, is what you would see on the edge of a car, or when you're walking down the street looking at old chains and old facades that are made of iron, and see the rust. And so that was once a marcasite crystal, and then once the chemistry touched that crystal over a certain period of time, that crystal was completely transformed. All of the sulfur was stripped from it, and then oxygen was replaced by what was sulfur, transforming it into an oxide species. Down on the bottom left corner, that's another example where it's partially been oxidized. And so, there's these massive pyrite crystals. I'm holding one up on my camera. And there's little holes, and the chemistry actually goes down those holes. What you're calling in the image is cleavage planes. And you can see that where you have the highest reflection, where it's most white, every point sample with the XRF came back as iron and sulfur, so pyrite. And then wherever it's gray and black in between along those cleavage planes, you can see that the sulfur's been stripped away and hematite, or the oxide form, remains. And then the final example is in the bottom right corner. It's kind of like this cube I'm holding up here. And the chemistry basically works on it from the outside in. If you go by any ocean or lake near your house and you see a chain that keeps people from falling in the water, on the outside it's rusted and cracked. But if you were to cut it down the center, you would see that there is still solid iron. And the same thing happens here. In the bottom image, you can see where the chemistry is eaten from the outside towards the center. You can actually see the cracks forming. The rust, which is the hematite. There's a little shadow here zone. This is where the transition's happening. So the results that we got back in this area were partially hematite, partially pyrite. And then down the center is still pyrite. And what's interesting, there's also a pre-existing crack here, and you can see it preferentially eating down that crack. And that's what the chemistry is actually doing in the oxide heap, is the chemistry is basically eating away, removing the sulfur. Oxygen is replacing that sulfur. We're creating oxide ore on the oxide pad. And once it's oxide ore, if there's gold in here, which there is in the case of Metates and several deposits globally, that gold is now recoverable. Whereas if it remained in the sulfide form, the cyanide would not actually get in there to get the gold, or very little gold would be actually captured. This next image is straight from our PEA, and this kind of highlights how the technology is going to work at Metates. This concentric circles here is our pit. This green area here is our 3-stage crush. In the case of our PEA, we were getting it down to about half an inch. And then we get it to this blue football field here, which is our oxidation pad. And the way that we envision it is conveyors are bringing the material up, and we have 10 cells, and every cell gets 20 days of material. So 20 days of material is placed in the cell. Once that's done, it goes to cell number 2, 20 days of material. Once you get to cell number 10, that first cell has been there for 200 days, right? It goes back over, and now it's oxidized, and that material is then picked up by a rotary shovel. It goes back onto the conveyor over to this pink area, which is called the heap leach. And this is where the cyanidation process happens, where now the gold is in the oxide ore. The gold is now recoverable. We're recovering the gold. It comes down to the Metates, and there's a foundry that will be producing doré gold at the end of it. And so that's kind of the whole physical mechanism for the technology.
Okay. Right. Okay. So just in terms of kind of the physical and the geotechnical considerations, I mean, how do you mitigate physical degradation issues, like, whether it be heat compaction or slumping, or we talked about permeability decline over prolonged oxidation periods, right? And what sort of geotechnical testing or modeling supports the way that you're thinking?
Yeah, that's another one that's kind of different for every ore body. So Hycroft, for example, slumped like crazy. We'd stack it at 25 feet, and in 2 weeks it'd be down to 20. And that's where some of that permeability issue comes in. The benefit we had there was that at 20 feet, we were still able to oxidize it. We still had, enough temperature change from the morning to the evening. We saw enough air moving through, and we put enough reagents through it to where we still oxidize. And you could see that at the foot of that heap, there was just a bright orange rust-colored puddle kind of accumulating at the trough. And that's the type of thing that we test for in a preliminary program. We'll do the hydrostatic testing and the whole slew of stuff that goes into a normal PEA. It just happens to also give supporting information for the oxidation step. And then, permeability changes with crush size. So that's another thing you can do to kind of mess with it. If you say, all right, we tried a 1/4 inch to really expose a lot of surfaces and it's slumping, it's locked up, then all right, we'll look at, 3/8 or 1/2 inch. And there's a variety of sizes where I think it'll work pretty well, and it'll really depend on what your deposit's telling you.
So, and you, obviously, that's an economic decision there in terms of the trade-off between kind of finer crushing.
Sure,
there's a cost, energy cost to
yeah.
that, versus, heap leach permeability, reagent consumption, all that kind of good stuff. And that's very different from column testing. And how long a process do you envisage in terms of being able to work out those kind of economics in the field, as it were?
Yeah. So I think JP said it to me not too long ago, where the average development time for a mine these days is like 28 years, which is kind of ridiculous if you think about it. Having been involved with the development of so many mines, and I've seen some get to the finish line and some in the early days. But the metallurgy really is not what's going to take you up that 28 years. We've kind of got and I think maybe we get into it later in this presentation, but we've got a plan laid out where we get a really small sample from one of our properties, someone else who's interested in the technology, and in 60 days we have an idea: is this material oxidizing, and is that oxidation yielding improved gold recovery? And if it does, then we'll talk to them about getting more samples, doing a wider test program that would reflect what you do for your normal cyanide heap operation. And part of what I typically do with that is send it to a specialized lab that does, they'll do a test to see how high you can stack to before you start having that consolidation and slumping effect that seals up your heap. They'll test stability of ore, and all that information feeds into the heap building decision.
But isn't there there's a kind of transition from, let's say, from contesting through to large scale pilot operations and onto commercial operations. So it's great to kind of outsource that sort of stuff, but you yourselves have got to, I'm sure, discuss the kind of technical parameters, whether it be, heap height, stacking methods, aeration, irrigation, whatever you're looking at. So I'm just interested in that kind of time frame.
Yeah. Okay, so then basically you can substitute the normal metallurgy section for something we've been overseeing for our affiliated projects, which is metallurgy plus the oxidation process. And really, it's not much longer to do the oxidation work in the lab, because what we've seen is post-oxidation, an ore in a heap environment will recover much faster, a much steeper recovery curve than your kind of typical gradual flattening out curve. So you only end up with, a month or two longer full cycle time oxidation and cyanidation compared to your long cyanidation that's more typical in the industry. So adding a couple of months there at each scale, you'll probably add 4, 5, 6 months over the 2 or 3 years of metallurgy work you'll do if everything's smooth. And then if you have to go back to the program a few times, you'll add a few more months here and there. But again, you'll be caught up doing permits and getting basic engineering done also.
And can you talk about some of the metrics that you guys are looking at? Because there's, again, a sort of transference of confidence from you and then the board and then onto the marketplace to kind of justify the kind of commercial viability and investor confidence. And that's because this is a story you said, well, like a lot of stories, it's a long time in the making, but my goodness, the upside's great if you can get there.
Absolutely. And we understand that, and that whenever there's a big upside, everyone has that is it too good to be true thought. So for me, I've had the benefit of being there, firsthand for the commercial scale, and I understand that not everyone's seen that, and everyone has a question of, well, why isn't Hycroft still doing it? The effects of getting your operation wiped out by COVID and then losing all your leadership in that period is pretty tough to walk people through. So we're looking at, sure, we're testing. We've got Metates test work that's looking great. We're going to bring in other sites material and do the same thing there. We're also planning on getting a pilot plant operating kind of in the near future for the same purpose. People whose ore we test in the lab, we can go walk them to it and say, this is how it's going to work. This is how it is working. And instead of every site saying, all right, well, we need to do a pilot plant phase for 2 years, they'll understand that, all right, this is something that if we can demonstrate it works in the lab, it's going to work on the heap. So let's move forward with our PFS or our FS and say, this is the plan, this is the result it's going to give us based on the normal met work you would put in a 43101, and then go from there.
I guess the important thing here is we're continuing to advance the test work at Metates. More material has been sent to the lab, and the preparation work is all happening, and we're moving forward on there. But another way to get this out to the market about the technology and the value creation that we can be doing is looking at other people's samples. And that was one of the reasons why we brought Justin in, was one, he has all the knowledge. He's done the commercialization. He's done the role of the technology at the predecessor. And now, as we continue to advance Metates, we actually have capacity with the team that we have now to start looking at samples from other companies and projects. And by doing work there, we're not only increasing the value of the technology, but we're also increasing the value of Metates hand in hand. And so it's a great opportunity for us to accept materials, start showing to the market that it's not just Metates, it's not just Hycroft. There's actually lots of deposits out there, and internally we have a list of over 200 deposits that we've identified where we believe the technology will work on them. And we've been working through that list and being very selective and choosing teams and projects that we want to work with to basically start to roll this technology out across the precious metal environment.
Yeah, we think there's an opportunity for projects that already have infrastructure in place. Maybe they're nearing the end of their life. They've spent all their oxide ore, and we can say, hey, we'll help you guys get some testing off the ground for this, and if it looks good, we can work together to get a pilot plan up that'll prove your next phase out, and in combination with that, it'll prove out, hey, the plan they've got for Metates isn't crazy. Here they go successful with it again in another place. And so I think there's a lot of opportunity in the industry, you know, between our board and JP and myself. We know a lot of people in the industry that are interested, willing to work with us, and a lot's in development.
Okay. Sorry, I sort of interrupted the flow of the presentation. I don't know if you wanted to go on.
Yeah, so the next part of this presentation is about the ESG aspect of the technology. And just to be clear, these are not our numbers. These are Barrick's numbers. And we're comparing Pueblo Viejo in the Dominican Republic, which is a POX autoclave system, versus their Veradero mine in Argentina, which is a heap leach. And you can see very clearly on a water consumption basis, when you're running POX autoclaves, you need lots of water. And that's because you need a flotation facility to make a concentrate of sulfides. When you're in a heap leach environment, you're just crushing and you're putting on a heap, right? And then you're using the chemistry to do the work.
You only lose water to evap.
Yeah, there's very little water that's going into the system. Okay. Now on the energy use basis, again, you remember I was talking about we needed a desalination plant at Metates. We needed flotation cells. We needed to build a power plant. Then we had to run POX autoclaves basically in an oxygen plant. And all of that requires a lot of energy for each ounce produced. In the case of in a heap leach environment, it's again the chemistry that is putting the energy in to do the conversion. It's not energy from an external source being brought in, whether that's power or another source. And then the final thing here is on a GHG basis. Again, once you start putting a lot of energy in, the source of the energy is fossil fuels potentially, or there's a power line that goes to somewhere else where there's fossil fuels associated with it. And so the GHG emissions in a POX autoclave is much higher. And then finally, because we're not doing a flotation, there's no tailings facility when you run a heap leach in a heap leach environment. So our technology basically would fall on the right-hand side of this image, and the alternatives that are out there generally would fall on the left-hand side. So as people are thinking about the future, their greenhouse gas footprint, their energy use, which is that's a scarce resource. Water, again, that's a scarce resource. If we're able to do things in that heap leach environment, then our demands on the environment, our demands on energy are all diminished to a point where it's considered to be a green gold alternative to other ways of unlocking refractory deposits. I'll also just talk, there's other opportunities out there that would again fall under the autoclave route, and that would be roasters. Again, roasters need flotation, that needs water. Obviously, just hearing the word roaster, first thing that comes to mind is GHG emissions and lots of energy consumption. So you can see that would fall on the left-hand side. If you're producing a concentrate that then you're shipping overseas to Asia to then be run through a smelter refinery, again, smelter refinery, you need flotation to make that concentrate. Then you're shipping it across the ocean, and then you're putting it into a refiner smelter, again, energy use and GHG emissions. So it fall on that left-hand side. And the other alternative that's out there is a biox. And biox, again, requires flotation in order to make a concentrate. And then you have these little bacteria that are finicky, that if the temperature changes or the pH changes, or even the oxygen or the lack of oxygen changes, you kill the bacteria and you kill the whole biox heap, right? And so in our case, it's only chemistry that's doing the work, right? And it's green gold, as we would say, because it's way less demanding on the environment and a very viable opportunity for the future.
I'm going to say nothing about green gold. We've seen green iron ore. We've seen it all. So green gold's fine by me.
Yeah.
Yeah.
So this is just kind of a high-level summary of everything that's happening around, giving a summary of all the technology and of all of our assets. So as we mentioned, we have more material being sent to the lab. We're doing the larger diameter test work. We continue to advance Lucy. We're working through the detailed work towards a pre-feasibility study with the metallurgical work that's happening now. And we're still doing work in the field to understand the environment around Metates. And then again, as many of you know, we're continuing to move forward on the San Vicente 3 concession, looking for a resolution on that. But the key thing here is the technology is really the most important thing for both Metates and for the gold and silver industry. And bringing Justin on has given us a new catalyst for the company to continue to advance the technology, not only looking at Metates, but looking at it on a global scale and really highlighting the potential of the technology to unlock that $1.5 trillion market that we expect is out there, and all these viable deposits that are not moving forward because they cannot raise the $3.5+ billion to build them. Or there's a mine that they've mined out all the oxide or are about to mine out all the oxide, and they're about to close the door. They've got reclamation costs, closure costs, and 100 years of water treatment costs. And we have a viable solution to keep those mines turning. And the capital involved is actually something that's executable. So I think the technology is going to be a game changer for the precious metals industry. And we're looking forward to being on the forefront of that transformation.